what do you make of inflation overall for 2025? Are we staying around 3%, heading towards 2%, or higher?
When you're thinking just from a macro perspective, whenever you're thinking about sort of the big drivers of asset prices, what basically growth and inflation, you got to think about which ones of those are going to be more volatile. And for a while, we had volatile inflation and inflation expectations for a couple of years, and that drove asset prices. Like inflation is not going to be interesting in 2025, right? It's gradually cooling. All the data is aligned with that. The Fed is mostly looking at it and saying it's gradually cooling. And whether it's kind of stuck a little too high, like at 2.5%, or a little bit above or a little bit below that, it's not going to matter to asset prices. The thing that's going to matter to asset prices is, do we get real GDP growth at 3% over the course of 2025? Do we get high double-digit earnings growth, which is currently priced in the equity market in 2025? Those are growth measures. That's the real uncertainty in this economy, not, is inflation going to be 20 basis points higher or lower than what was expected?
Okay, well, the other component of Fed monetary policy is the labor market. U.S. weekly jobless claims declined amid stable labor market, according to Reuters. The number of Americans filing new applications for unemployment benefits decreased last week, suggesting the labor market remained stable early in February. Initial claims for state unemployment benefits fell 7,000 to a seasonally adjusted 213,000 for the week ended February 8th. Economists polled by Reuters have forecast 215,000. So it is better than expected in terms of stability. Is the labor market strong for you right now?
Yeah, I mean, the labor market's been pretty stable for the last 18 months or so. It was very red hot in 2023 and early 24, and it's basically been stable since. And the initial claims data, which for regular readers of Twitter know that I publish something every week looking at the claims data. And it's a good real-time measure of what's going on, in particular around layoffs, which is what it specifically measures. And what you see there is that layoffs remain at cycle lows. There's not a lot of proactive reduction in labor force by companies. And so to the extent that there's weakness in labor, it's really around the hiring side of things. And the overall labor force growth. And that's the side of things that is likely to be disappointing in the future. But, it's disappointing relative to high expectations, not really. There's no indications that we're moving swiftly into a recessionary type mode.